Well, as you can see, we've had a little bit of a reversal in the last few moments. Now you've got the Dow, the S&P, and the NASDAQ all down. Again, I want to emphasize that we are well off of session lows for all the major indices. The Dow at one point was down 430, so we're only down 44. We've got about 5 minutes to go. Now, we told you how Atlantic Equities is bearish on Goldman and Morgan Stanley, but the firms as Wells Fargo, First Republic, and Bank of America appear to be able to weather a downturn. B of A happens to be one of our countdown closers picks. I want to bring in Portfolio Wealth Advisors, CIO and President Lee Munson. Lee, it's always great to speak with you, and here comes earnings. And it's going to be the banks, and we're going to start with JP Morgan Chase. We are just a couple of weeks away. What do you expect to hear from the banks? We had lowered expectations for the second quarter. And then that played out, as we know, with them hitting those lowered expectations. What do you think happens now?
I'm not sure that we're going to need to lower them quite so much. I think a lot of the bad news is there. I mean, come on, let's be reasonable. I think investors psychologically have discounted mortgage revenues down to zero, right? I mean, that's what we're looking at. We're looking at a 30-year rate over 6%, and we think, how are we going to take any money? But we have to look past this news and think, industry's deposit bases, those are sticky. And as we see the short-term treasuries go up, those are dollars that these banks are going to make in their net interest margin. So I think that's going to be more positive news. I think trading isn't going to be bad news for some of those banks that still have trading revenues. And you know what? M&A is a wild card. I just don't know, so I'd rather just tell you that I don't know. So I think there's going to be better times ahead. When you look at some of these banks and you ask yourself, were they making lower lows like the general market did when we look back in June? And for a lot of these, the answer is no. Bank of America just has to be my personal favorite. JPM's fine. Citigroup's the perennial value trap. And Wells Fargo, you have to know more about their regulatory issues than I do, so I just stay clear of it. And I also want to make a comment on, I see the Goldman Sachs is downgraded. I'm actually long that for myself, for some of my clients. I think people are downgrading some of these brokerage firms far too much. Goldman would be my favorite. But I would say think forward and remember, in another year or so, these mortgage rates are going to have to come down. The Fed's going to have to get their foot off this gas pedal, and we're going to see better times. But the market will price that in months before it happens.
Well, with Goldman Sachs in particular, I think a lot of the thinking goes in particular with Goldman. Look, it's investment banking revenue, it's commodities, it's fixed income trading, and all of that it's not going to be a good quarter, not going to be a good year, but for any of them. But in particular, Goldman's I think is a little more sensitive to that. As far as JP Morgan Chase, I see your point. Like Jamie Dimon is still running that bank, and his comments about the economy, he's been very clear. The one thing I'm curious about, though, is with Wells Fargo, because Wells Fargo, the biggest chunk of their business is mortgages. More West Coast than East Coast, but we've seen a shift in housing. Demand is down. Wouldn't that hurt Wells Fargo's bottom line, just in a general sense? I'm not asking you to get too into the weeds, but I think that's a theme that we're going to get with
I mean, if you just want my general read, absolutely 100% agree. Now, remember, last quarter, management came in and said, our number one job is to shrink our mortgage department. We want to be less reliant. And so, again, if you've got a good line on how that's going, then you need to invest accordingly. For me, I'm not sure how much lip service that is, where they just want to tell Wall Street what we want to hear, which is less reliance on mortgages. But I think that we've come so quick, so fast. You've got to know this stock forwards, backwards. You got to be on the inside to really understand the scoop. And I think most investors should just pick something else that doesn't have the exposure.
All right, Lee, I got about 10 seconds with you. Final thoughts?
Final thoughts. Higher prices are ahead. Can't tell you about timing, but I would say that between now and a year from now, what you buy today, if you buy in the value spectrum, I think you're going to be rewarded. I'm bullish.
Okay. All right. Bullish. Yeah, it's definitely sector by sector these days. Lee Munson. Lee, thank you so much. It's great to see you. Well, what a difference an hour makes. This show is never boring, I'll tell you. Liz Claman will be back tomorrow with you. Maybe she'll have less volatility for you. Again, major averages all lower.